Hello traders, it's once again time to prove that this systematic trading approach works. This is all we do constantly. When I record a YouTube video, I highlight a pick. The next video starts off with a review of that previous pick. I was invited to speak by the CBOE and the Tradier at their recent summit, and that video is not on my channel, so I thought I would take those picks and start off with them. This conference took place on October 26th, and the primary thrust of that summit was to show how options are impacted by your technical analysis. I was a keynote speaker at this event, and I went through market first, doing technical analysis on the market, technical analysis on the stock, and then I showed how that led me to my options trading strategy. Well, the market had been extremely volatile. I did feel that there was a good chance for us to have a year-end rally based on the technicals at the time, but I also felt that there was a chance that the market might be pulling back in that time. So I could not get aggressively long. So I had to have a neutral to slightly bullish strategy. That meant selling out of the money bullish put spreads. During that summit, one of the trades that I highlighted was selling the Netflix November 11th 272.50 270 put credit spread for a 50-cent credit. And you can see how we're wanting this gap to be preserved, and that is a support level that we're going to be leaning on along with that 200-day moving average. You can see what the stock has done. Last Friday, these options expired well out of the money for a 25% return on that trade. And yes, we did have some market volatility. The stock did pull back temporarily, but as soon as the market found its footing, the stock was off to the races. AEHR. Absolutely loved this stock. Look at how well the stock has held up during a market bloodbath. Downward sloping trend line, breach to the upside through horizontal resistance. I wanted to lean on this 1750 support level. That was the gap up right here. I felt that that gap could be preserved, and there were plenty of other support levels that the stock should be able to rest on. But I loved this strength. So the trade here was to sell the November 18th 1750 puts naked for 50 cents. And that would make me long stock at $17. Here's what the stock has done. You can see this is where the conference was. It pulled back, it checked that breakout, and as soon as the market found its footing, the stock took off. Look, it's almost at $25 now. I'm not going to have an opportunity to buy it at $17, but it's still going to yield about a 20% return on that trade. The third and final trade that I highlighted was ENPH. They had just come out with earnings right here. You can see after the close. Love this gap up. Downward sloping trend line, breach to the upside. Stock had been holding up very, very well relative to the market. And you can see the major moving averages right here. That's what we're going to be leaning on. We sold the November 11th 262.50 puts, bought the 260s, did that for a 45-cent credit. You actually could have gotten 50 cents for it. And here's what the stock did. There's where the conference was. Stock pulled back right to that breakout, and then it's off to the races. That spread expired well out of the money as well. 25% winner, 3 for 3 on the CBOE Tradier Summit. Again, proving that this systematic trading approach works. So I've gone through all the trades that we did on my YouTube channel in September and October. So please watch to see how each one of those picks played out. This systematic trading approach works. I hope you come in, learn more about it, and join us. Thank you. Volume today. So yeah, I think NVIDIA could be a good short. CRWD. Boom. That's your short of the day right there. I could tell you looking at the 5-minute chart, but I can also tell you that the D1 chart is bearish. Why? Look at that lift in the market. What did the stock do? Nothing. Nothing. Whap, 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 whap. Sellers don't care that the market had a little short covering bounce. any bounce in this stock, and they are nailing it. Look at that beautiful upward sloping trend line. Let's draw it in. Let's see what we got here. Well, we can draw one like that. Break down there, break down below the 200-day, break down below the 100-day. You can also tighten this up and you can capture a couple of more points in here as well. So you got basically 4 touches along the way. That's a nice gradual sloping trend line. That means it's very valid. You can see how the futures right here are struggling to maintain these green candles, struggling at that resistance level. OneOP is spiking. I'd like to see him take another shot at it, another shot at it, another shot at it, repel it, get that bearish 1OP cross. I'll be shorting. That's all I got for you today. Take a look at CRWD because that was my bearish pick of the day. I loved this tight upward sloping trend line with lots of touches. And you can see earnings right there. Big, long red candle. That was the reaction. This is what we were looking at for the short position. And the video came out on September 1st, right in here about an hour after the open. So we did have some follow through selling in that stock, but if you overstayed your welcome, you had to stop out on this long green candle here, especially when it took out the open from this red candle of the day. And the reason for it is this is not a dog. This stock has actually done well. It's off of its lows. Yeah, it sold off hard earlier in the year. It's off of its lows. It compressed. It weathered the storm when the market was selling off. Now it's breaking through technical resistance. I don't trade these formations often, but when I see them, I point them out. Head and shoulders formation. That is an inverted head and shoulders formation. Neckline right here, approximately at this high right here. If it gets through that, it's going to go even further. So hey, let's set an alert line there. I really like Airbnb. By the time I do my next video, I believe that it is going to be trading higher. Well, gee, Pete, you just told me market a little iffy in here. You don't know if this 100-day moving average is going to last. You don't know if we're going to see a head fake here. We're going to drop back below it. How can you be so confident trading Airbnb? Well, first of all, I'm focusing on day trades right now. If I start to see that the market is gaining momentum and getting through a couple more technical resistance levels, I'm going to have more confidence in getting long for a swing trade. But if I'm selling it out of the money bullish put spread keying off the 110 area, stock has plenty of room to move around. If I'm day trading the stock, I know that it's got a nice clear path to get up to this horizontal resistance level. If I were contemplating a swing trade and just buying the stock, I wouldn't get aggressive with buying weekly calls or anything like that. But if the market did happen to reverse, I've already seen what the stock has done during a market sell-off. It weathered the storm very, very well. And that tells me that institutions want to own Airbnb right here. So that gives me additional confidence to day trade it and short-term swing trade it and sell out of the money bullish put spreads on it. Thanks so much for watching. Please leave your comments. We'll see you next week. Good morning, traders. It is Tuesday, September 13th. We are about an hour and a half before the open. Let's get started right away and take a look at the last pick. On Friday, about 90 minutes into trading, which is right about here, I highlighted Airbnb. You can see how the stock continued to grind higher Friday. Really nice move up yesterday. Let's take a look at that daily chart, get our bearings, see where we're at. Here's what I like about the stock. We had this downward sloping trend line here, breach to the upside. We had this long candle here that was able to close above the 100-day moving average and follow through. I still believe we're going to see Airbnb get through this horizontal resistance level. Stock looks really good. Folks, I think Apple's going to be my pick of the day. If I had to pick a stock that I've looked at right now, I used my green royal flush search. This is excellent for swing traders because it has a buy signal. This stock has a buy signal across every timeline from 5 minute, 15 minute, 30 minute, 1 hour, 2 hour, daily. All of those signals are in alignment. So I'm going to go with the Apple. I really like the price action here. I think it's got plenty of room to go. Love that breakout there. Love the fact that it's above the 200-day moving average. So my thesis for this trade is, first of all, I like the market. All of my indicators are telling me that the market is going to move higher right now. Would I chase a 25-point market rally on the open today? No, 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 I would not. Well, why not? You just said you were bullish. Light volume gap up. Light volume gap up. Here we go, another gap up here. Now we're going to get another gap up on light volume. No, I'm not interested in chasing anything on the open. Let's take a look at the 5-minute chart of the S&P 500. Yesterday, there's your gap up. Okay, hey, this is actually pretty nice. We stacked some green candles here. All right, I'm going to chase this baby. Oh, yeah, this is the real deal. Haha, look at that move. Uh-oh. Oh, that's okay. I'm still bullish, holding the gap. Looks good. Yeah, okay, here we go. Yeah. This is it. This is where we take out the high. And another retest of that open. We are going to see moves like this. That means you need to be patient. Got a big gap up today. We're going to come back and fill in some of these gaps. You know we are. So just be patient. Take a deep breath. This is not the last train out of town. There are many buyers and sellers, and all you got to do is take a look at the daily chart, for crying out loud. Do you think that this is the last chance for you to buy? Absolutely not. And that's how asset managers are thinking right now, too. Yeah, this is a nice little bounce. Maybe I'll nibble in here a little bit, but this is not the last time that I'll have a chance to buy this year. We've got an FOMC meeting coming up. We got a lot of news that's going to keep investors on edge. So that tells you that you do not have to chase. There are plenty of opportunities to get on any side of the market that you want. So with regards to Apple, what you want to see is you want to see that open and you want to see it preserve the gains. So here is a classic telling. Let's get all this garbage off of here so that we can see it clearly. Yesterday, as I told you, market gaps up, Apple gaps up. Okay, great. So here we go. Oh, market has a little dip. Apple holds its own. Very interesting. Oh, look at this. Market lifts off. Oh, here goes the market has that next leg down. Apple is still in an uptrend. And all I got to do is put up one OSI, and you're going to see that reflected in one OSI because it is going to stay above zero and it measures relative strength. Another way to view this same data is let's just do an overlay of the S&P 500. And there's the move I was telling you about. Ka-chunk goes the S&P 500. Apple, if you bought that, you're okay. You're hanging in there. You're going, all right. I don't have a problem with that. All right, get a nice little market rally. It joins that bounce right here with gusto. Takes out the high of the day. Boom, just like that. Uh-oh, here comes that next big leg down in the S&P 500. Tests the opening. What does Apple do? Yeah, it moves down a little bit. As soon as the market finds a little bit of support, there goes Apple. This is why we trade relative strength. If you were in Apple yesterday, yes, you could have watched for these market moves. You could have been prudent. You could have said, all right, I'm going to get out. But if the stock continues to hold its relative strength, I'm going to get back in and I'm going to wait for that market bounce. Thank you very much. Uh-oh, here comes another big leg down. Yeah, I can get out here. Okay, higher low. This is good. Yeah, I'll get back in here and then you're on for the ride. That is how you day trade stocks. So do not rush. You will have an opportunity to get long. Hello traders, it's Tuesday, September 13th. I did a video about 90 minutes before the open this morning. The CPI had not come out. We didn't know what the reaction was. In that video, I gave you my pick of the day, Apple. Let's take a look at it. It was a stinker, but you should not have lost a dime on it because I told you in the video, do not take any positions on the open. We were looking at a gap up at the time. The S&P 500 futures were up about 20, 25 points overnight. Wow, did that change on this CPI number? So we gap down and then we see continued selling. These gap and go formations have been really hard to trade as far as S&P 500 futures because you come down, you establish the low, and then you compress. And all of this move takes place in the course of about an hour. So if you take a look at the initial part of the move, you're like, is this decent? Oh, there we go. We got a little bit of a move right in here, but you're still wondering because these are mixed overlapping candles. Are we going to see a long green candle that challenges this high to flush out early shorts, or are we going to continue down? Okay, now things are starting to get organized. You can short in here, but look, this move is exhausted just about when it starts to get going. So very, very difficult to make money in this type of gap and go environment because then after the first hour or 90 minutes, you compress and now you do a whole lot of nothing. Did have an upward sloping trend line here. There is a bearish 1OP cross. This was a nice short that I entered and I exited. I'm looking to re-enter. This first drop below the low of the day, support, 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 is going to flush out bullish speculators. If I see follow through in here, I am going to be shorting because that tells me that it was not a head fake and then a bounce. It is persistent selling pressure, and I believe that's what we're going to see. This is the key right here. We could not get off the deck. Wham, 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 wham. Sellers are very, very busy. No big bounces today. I believe this is going to be a nasty little bearish trend day. So yes, we have to shift gears. We got to start looking at the bearish side of the equation. So let's take a look. I want to give you a good pick of the day. Apple was not going to work out. We had changing market conditions. LEN. And this is going to be my new pick of the day. So I will review this on the next video. You can see on a daily chart, we've got an upward sloping trend line right here. Let's add all of the major moving averages, and that will make this a little clearer. So we've got upward sloping trend line right here, breach to the downside, flagpole, little rally. There's our upward sloping trend line, breach to the downside. This is a bearish flag formation. And you can see that when the stock did bounce, it immediately found resistance at the 50-day moving average, bearish hammer. And if we look at the daily relative weakness, you can see that before the market sold off today, the stock was already relatively weak. So now that we've got market selling, we break through this horizontal support. This stock has nice downside. We've got a bearish 1OP cross right here. I would like to see better volume. That's the one thing that's missing. You can see that the volume is pretty minuscule in here, but the price action is good. And I believe this stock is going to continue to drift lower. You can see it has not had any bounce like the market did today. It has been weak relative to the market almost the entire Good morning, traders. We're about 2 hours before the open on September 16th. Want to get a video out today because I believe that a major support level is being breached on the S&P 500. This is going to have some follow through. So let's take a look at our last pick. LEN was the last pick, and it was a short. I produced that video before the open on Tuesday. We had this long red candle, and you can see that we've had follow through. This stock is not one that moves very quickly. This morning, the S&P 500 is down about 20 points before the open. The stock is indicated lower, so this is actually a nice pick. That I actually like. I think NTAP sets up really well. And you can see it's a pretty good mover. Once it establishes a trend, it's pretty orderly. So you get a nice steady downtrend, nice uptrend. Now we're in this nice downtrend. And tap is going to be your pick of the day. That I like on the short side. So, Pete, we've got this major market breakdown. Do I come in on the open and load up on NTAP puts? No, I wouldn't suggest doing that. Hello, traders. It's Wednesday, September 28th. We're about 2 hours into trading. It's been a while since I've been able to get any videos out. I'm sorry. The last one that I did was on September 16th. It was a good one. NTAP, bearish pick. September 16th, right in here. You can see the stock closed somewhere around the $69 level. You can see how the stock right now is all the way down to $63. Really nice move. About a 10% move, gradual drift lower, market's going to pop bull. First stock and only stock on the list is Eli Lilly. What I like about Eli Lilly is you can see this defined downward sloping trend line, breach to the upside, and we've also gotten through horizontal resistance right here. And the stock has been able to hold its high of the day. And there you can see, very choppy little move higher. In general, I don't like stocks like this that retrace all the time. Retrace, retrace, retrace. But in the context of a very weak market, it's going to be hard for you to find any bullish stocks on a daily chart because everything has been pounded. So this looks good. I like this. If I were buying it, I would want to see this high right here preserved. So we want to make sure now that we have the breakout, we want to see the open from today, which was 333.53. We want to see that preserved, and then the stock should be able to get some follow through on the upside. Love the big volume in here also. So that's also very, very nice. So let's go into another search. I like Lilly. It is your pick of the day. I'm going to give you another one that I like. It's setting up well, and I'll show you that stock right now. And I went into my heavy buying list. This is more of a short-term list. Netflix. I really like it. You can see how I have my GTC alert line. Well, Pete, what's so special about this stock? Well, if you realize that it is up and holding its own when the market has been down, then it looks a lot better. So we'll put up OneOSI, which measures strength relative to the S&P 500. This is what we trade. You can see the orange line is above zero. This stock has been holding up extremely well. It's above the 50-day moving average. There's a small little downward sloping trend line right here that it's through. I think it gets back up to this horizontal resistance easily. And if it does, it's going to start to fill in some of this gap. It's above the 100-day moving average as well. Let me illustrate this another way. What has the S&P 500 been doing? Down, 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 down. What's Netflix been doing? It's formed very nice support. It's compressing when the market has been going down. This is another sign of relative strength. I think it goes higher. Hello, traders. It's Tuesday, October 4th. We're 3 hours into the trading session. Let's take a look at the last two picks. I'm going to teach you a little bit about gap and go trading today. We've got a gap and go formation. We'll do our market analysis. Netflix was one of the stocks that I liked. You can see how the stock has been compressing, compressing, compressing. Let's overlay the S&P 500. Market has been down, down, down. Stock has been able to find support and stay above that 50-day moving average. In that video, I had mentioned leaning on some of the major moving averages, that 50-day moving average being one of them, and selling it out of the money bullish put spread on it. Even though the market did not do what we expected, which was to bounce, this bullish put spread would be in excellent shape right now. Lilly, that was another stock that I highlighted. I gave you two bullish picks in the event that the market would bounce. We had this long green candle at the time of the video, and we wanted the open of that long green candle to hold. It did not, and that would have represented a horizontal breakout. So this one right out of the gate should have been, it didn't hold that level, so it really didn't meet the criteria that we were looking at. The other thing I mentioned about Lilly is it's a very choppy stock. I do like the fact that it breached this downward sloping D1 trend line. It's been able to find support above that 50-day moving average. Nice long green candle today. So I like it. I think it sets up well for selling an out of the money bullish put spread down around that 100-day moving average. You might need another little dip in the stock to be able to get that off, but I do like this breakout here, and I like the fact that it's been able to challenge that resistance level again at a time when the market has what? Been down, down, down. That tells me that institutions are in there buying the stock. They feel that at this price level, even given the market backdrop, that it's a good value. Well, that's what we're looking for. We want to follow the smart money. That's the system that we trade. Relative strength helps us find that. So let's take a look at the markets all time frames. I love this. FSLR. This is going to be my long pick of the day. You can see that we had horizontal resistance right here, slight downward sloping trend line. Boom. Breach to the upside. Heavy volume as well. We'll put up the 10SI indicator, which shows us strength versus the market. Look at that orange line above zero. This stock has a ton of strength. I really like it. So FSLR, that is your pick. We are going to maintain that pick as long as the market is staying above. And let's get our market bearings here because I like to have caveats. What would I like to see the market do to maintain and preserve my bullish bounce thesis? Well, I would like the opening from today to be preserved, and the opening was 372.40. So that also was the high right there. I want to see that preserved. That now becomes a nice little horizontal support level. As long as we have that, FSLR should continue to move higher. We've got that really nice D1 breakout. So that's what I would be looking for. Hello, traders. It's Friday, October 7th. We're about 2 hours into trading. Today, I'm going to be focusing on bearish trend days. How do we identify them? And what's our mental state? What should we be looking at? How should we approach these days? Very, very important. I get asked all the time, Pete, I have the biggest problem exiting trades. I always take gains too early. So I'm going to address that issue because it's very important to put market context into the equation. That is going to help you identify when you should ride your winners, when you should be more passive with your targets. Let's start off with my last pick of the day, FSLR. That was a bullish pick. It came out right here. And you can see this beautiful breakout that we had on a daily chart and how the stock was starting to poke through it. Here's what I really like about the stock longer term. Look at this beautiful compression here. What has the market been doing? Down, down, down. That is a sign that institutions are in here buying it. Call a spade a spade. Was this a good pick? No, the timing of it was not good. And I'm going to get into that as well because I felt that a market bounce was pending and that this stock would have a chance to add to the gains. Unfortunately, didn't get the market bounce. And there is important information in that as well. So let's take a look at what happened. FSLR, I still like it. I think it sets up very well for out of the money bullish put spreads when the market is finding support. Right now, we're not. I think I'm going to go with AMD. Let's see what AMD is doing. I want it near the low of the day, which it is. I don't want stocks that are bouncing a lot right now because the market's been in a steady drift lower. I do like AMD on the short side. I like this breakdown here. That's going to be your short pick of the day. More than anything, I mean, we've got a very volatile market right now. It's tough for me to record during the day. I'm day trading. I'm not swing trading. I have no clue what the market's going to do. We should have bounced in here. This is a really nice pattern, really nice formation. I expected us to have a nice gap higher. I even traded it. I was able to cover that for no loss when I didn't see the gap up yesterday. I didn't hesitate to cover that overnight long for a scratch. And then once I watched the price action unfold yesterday, I'm like,
We're not going higher, we're going lower. We should have bounced and we didn't. There's a lot of selling pressure out there. Just one word on the jobs report. I'm glad that people have jobs because the Fed is going to continue to tighten. They're going to do that regardless of the job scene because they're going to stay steadfast until they see inflation come down. Hourly wages plus 0.3%, not super inflationary, good in that sense. But when people have jobs during this tightening cycle, that is good because at some point we're going to see that decline. The longer we can get through this tightening cycle without having a recession, the better. Because if we go into a recession very, very quickly, I'm afraid that we could see some type of credit crisis because there are warning signs, global warning signs starting to surface. So I want strong jobs numbers while the Fed is hiking rates, even if it means was AMD. And that was a short that I had suggested taking Friday. The video came out right about in here. I had mentioned in the video, this is a bearish trend day. You should be focusing on the short side and the short side only. Do not get cute and try to pick bottoms. Do not get cute and trade the long side. Every bounce is a shorting opportunity. That is the mindset that you need to be in right now and probably through the rest of the year. AMD, nice drop. Look at that steady selling. This was an excellent pick. S&P futures are down about 25 points pre-open today. Stock's going to be trading even lower. Let's go into the daily chart. Let's take a look at why this made such a good pick. And you can see we have this deep sell-off here. We're below all the major moving averages. We've taken out this horizontal support level. We have a tiny little bounce. This is a bearish flag formation. I showed it to you. Upward sloping trend line, breach to the downside. They also came out and they lowered their revenue estimates by 16%. That is substantial. They see weakness in the PC market. Right now, everybody is cutting back on non-essential expenses. So yes, AMD is continuing to go down, and I'm expecting it to keep going lower for the next few days. So this actually will be a decent swing trade as well. This stock is going to be taken over. SNOW. One, two, three, four, 5 touches below the 50-day moving average, testing that 100-day moving average. I like it. This is your pick of the day. Why? It gets through that 100-day moving average. That's going to attract more sellers. You're through this upward sloping trend line. I like that. And it has lots of downside potential. The low of the year coming into play at 115. The stock is at 157.58. I want a stock that's going to drop so that the next time I do a video, I can review it and tell you that yes, this stock was lower than. Hello, traders. It's Wednesday, October 12th. We're about an hour before the close. I want to do a follow-up educational video on a piece that I did last Friday. Super, super important. I think you're going to love this content. I think it's really going to resonate with you. Let's take a look at the last pick that I had. It was SNOW, and it was a video that I just put out yesterday. And here's the price action. I said to short it on the open. That stock from that opening print dropped $10. If you stuck around, you shouldn't have. You should be taking gains of that magnitude right away. Do I still like the short? Yeah, I like the short. I wish it didn't bounce as much as it did. The market's also chopping back and forth. So if you've got an opportunity to make 10 bucks in about a half an hour, my God, you should take that. So what was the clue? Like to watch the videos because you always get a pick. And I'm using Royal Flush Bearish. That means that these stocks have a bearish trade signal across every time frame from 5-minute to a D1 chart. So what do I like about this particular short? Well, first of all, and most importantly, if I draw this upward sloping trend line right here, it crosses at least 5 different points. And when that trend line is breached, it will take out the low from today. So the caveat to this trade, and expect choppy trading with this guy, because look, it's up, it's down, it's up, it's down, it's choppy all over the place. So when these trend lines are breached, yes, I think when that trend line's breached, it's got a path to the 200-day moving average. Stock doesn't move much. It has fairly low option implied volatilities. What else might I like about this stock? Well, if I look at this particular search today, you'll notice that I have VZ on the list. Huh, T-Mobile's in the same space as Verizon. Look what Verizon's done. Nasty, nasty selling. A little while ago, telephone was on that list too. AT&T, also a cell provider. Nasty selling. Maybe T-Mobile is starting to cave in to some of that same selling pressure in that same group. I'll know if it makes a new low tomorrow that it's very likely to test that 200-day moving average. That's why I like it as a short. I'm not jumping up and down over this short, but it looks pretty good, especially if it can breach that upward sloping trend line. Right now, you've got a lot of stocks that are just absolutely crushed and they're being sold hard. So they're inching, inching, inching their way lower. Let's take a look at one thing. I want to make one parting comment. Microsoft, Google, Amazon, all pretty nasty, all starting to see some selling pressure. When the really big stocks, the really big names start to see selling pressure, the really solid companies longer term, then you know that you're probably getting close to a short term support level. As I say, the baby is getting thrown out with the bathwater. That would be that type of case. There's nothing that you can really latch onto. It's just kind of a feel thing. The same thing I've said when the market was in go-go rally mode and it was pushing, pushing, pushing higher a year ago. The dogs are barking. Well, what does that mean? When you see the laggards participating in that final push of the market move higher, you know that things are getting pretty overextended. And that's usually a good time to watch for a shorting opportunity. Same thing is kind of true on the downside. When the really, really solid, strong stocks start to get hammered, then you know that you're getting pretty close to a support level. So watch for that. You don't have to trade it. You should still be favoring
Direction. So the last pick that I gave you was TMUS, and that was before the open yesterday. Wanted to talk about gap and go formations. TMUS did open lower and it instantly bounced. And given the fact that the market instantly bounced, you should not have been in there pounding a gap and go open with the market also not selling off and instantly taking out the high of the day. So you should have held off on this. Okay, no, this is not a particularly good pick because the market wasn't cooperating. But TMUS did break that nice upward sloping trend line that I showed you, and I told you that the goal was the 200-day moving average. Well, you hit your goal right pretty much on those opening prints right there and the low of the day. So wouldn't be real wise to short something when it's actually hitting our JP Morgan earnings. So that's going to be possibly a good pick. Yeah, this is a hard one to pass on. This is such a nice formation because you've got a nice solid downward sloping trend line. You have earnings before the open here. Stock is able to hold on to the 100-day and 200-day moving averages post earnings when the market was selling off. And now you've got this gigantic bullish engulfing candle. I like Pepsi. Now, Pepsi is not a huge mover. Pepsi is not the kind of stock where you're going to bang, 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 make a huge 10% return on it, but it's a very nice grinder. So if we start to see some really positive price action in the market, I think Pepsi works. That is the long green candle we want to preserve.
This halfway point, this 50-day moving average serves well. Yes, if it retraces to this, selling an out of the money bullish put spread below this 100-day, 200-day moving average, that is a nice looking trade. And that comes into play around the 50-day moving average is at 171, so we want to see that preserved. If it is, and the market looks pretty decent, I like selling a bullish put spread keying off of that 169 price point because I don't believe the stock is going to go back below there. I'm going to take a look at just a couple.
Hello, traders. It's Tuesday, October 25th. We're about 90 minutes into the open. I'm sorry I haven't been able to get any videos out recently. Been a little busy in my personal life. Everything is trending higher. I should be able to get on track and to do more videos. The last pick that I highlighted was Pepsi. I had mentioned to you that I thought the market had a chance to bounce. That's exactly what's happening. By the way, right now I am long S&P futures. We'll see why I'm long them and why I believe the market's going to continue to go higher. Pepsi was a nice pick. I said, I don't know. We could have some nervous jitters. I'd like to see half of this long green candle preserved, which it was. We dipped temporarily below that 50-day moving average, but the 100-day and 200-day moving averages held firm. And I liked selling an out of the money bullish put spread below these major moving averages. That trade is in nice shape. You can see downward sloping trend line here. This is a bullish flag formation. I believe Pepsi still has a chance to challenge the high of the year. Looks very, very good to me. Flicks. I do like this. Horizontal breakout right here. Love that. Gaps higher. Is able to preserve these gains. Never gets in the gap. Long green candle last Friday. And now it's continuing to build above that 200-day moving average. This could easily be my pick of the day. Now, you can't get too close to the money here. Excuse me, you have to get close to the money here to get any kind of decent credit. So a 265, 260 bullish put spread on Netflix could work. You could also do a call debit spread, but you would need to make sure that the market is continuing to push higher. Without that market momentum, this stock is not going to have the fuel that it needs to move higher. But I do really like that breakout. So if I can sell that, this is a post earnings play. If I can sell that 265, 260 bullish put spread, and I can get anywhere near $1 for it, I'm interested. I would even go out to a November expiration on this. So let's take a look and see where it's trading. I'm going to bring up an option chain and we will take a look and we'll go out to the November 18th expiration, which is, I think we're going to have to go out that far to get the credit that I want because we're going far out of the money. And let's see, the 265, 260. Yes, you can easily get $1 for that. Let's see if we can go a little bit further out and maybe we can do this for 50 cents, the 262.50, the 260. And yes, we can get 50 cents for that. So I like that even better. Let's see if we can go a little bit closer in time and still get a decent credit. This is the process that I go through. We'll go to November 11th expiration. And we're going to look at that 262.50, 260. Let's reset this. And there you can see that spread is 35 cents bid, offered at 55 cents. Any little bit of a pullback, you know we can get 45 cents for it right now. I like that spread. If I can get 45 cents for it, and that would be middling it, I like selling the November 11th 260, 250, 260 bullish put spread, doing that for a credit of 45 cents. That's going to yield about a 22-23% return, and I'll only have to wait 3 weeks for that to play out. And I am distancing myself from the action. You can see the stock is currently at about 293, so we've got about $30, about 10% that the stock can move lower. And we have the 200-day moving average in the way. When I say in the way, that's providing additional support. We should see buyers at that level. That's also the halfway point of this long green candle, so I would expect that to attract some buyers as well. And
we have the gap. This is 264. It was not able to test that gap after earnings, even though the market had some weakness in here. So that 264 level should also provide support. When I sell these out of the money bullish put spreads, I want to have as many different lines of technical support between the short strike price and the current stock price as possible, because all of those layers of support are going to attract buyers and keep the stock above it, so that tick, 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 time premium decay can work its magic. The spread expires worthless. I get to keep my credit, and in this case, generate a 23% return in a matter of a few weeks. So that is going to be your bullish. Hello, traders. We're 2 hours into trading on Friday, November 11th. First of all, thank you, veterans. Happy Veterans Day. Thank you for serving our nation. Thank you for protecting freedom around the world. Going to take a look at our last pick, Netflix. We're also going to take a look at the market and why I'm bullish right now. I was bullish a couple of weeks ago when I recorded the video. I'd mentioned to you then, seasonal strength is not something that you can ignore. I've been trading for 30 years. One of my axioms is never short the market in November and December. If you're super bearish, you can be in cash, but you cannot be short, not on a swing basis. You can be long also. We're going to talk a little bit about that. Netflix was the pick that I showed you. Why did I like Netflix so much? You can see that the market had been down, down, down. And so what we'll do is we'll overlay the SPY, and then you can see what the market had been doing while Netflix was actually holding support. Market down, down, down. That's why I liked this stock so much. Look, you can see it had rallied off its low. It had found support while the market was selling off. Earnings come out. Boom. Stock rallies up. I loved that relative strength. My issue was I didn't know if the market was going to move higher or lower. So the strategy was to distance myself from the action and to sell out of the money option premium. Bullish put spreads. That's the strategy we're going to be focusing on today. You can see how Netflix blew through the 200-day moving average. Well, we were going to be leaning on that support. We were also going to be leaning on the support from that gap higher. And so we were going to be selling it out of the money, 62.50, 260 bullish put spread in November, November 11th to be exact. Today, that spread's going to expire worthless. We sold that spread for a 45-cent credit. It's going to yield a little bit better than a 20% return. But look, we had to weather this pullback. Yes, we did. But you can see ultimately support was established, and now that the market is moving higher, this stock rallied instantly, and that put spread vaporized. So support levels and everything that we had in place have actually held. Right now, the stock is at 282, so there's no question that spread's going to expire worthless today. So Netflix, really, really like that pick. Let's take a look at the market. What has Pete so bullish, and what's